I think in this latest crypto cycle, retail, those who are still here, of course, not those who are going to traditional finance or TradeFi and they are trading or investing in traditional stocks. Those who are still in crypto, I think we are caught in between Bitcoin OGs or the oldest Bitcoin holders or whales and institutions. I think there's a battle going on there and we are just caught in the crossfire. If you think like that as well, you may want to watch this video because it will give you a different take of what might actually be playing out in front of everyone else. Because let's not kid ourselves, most of us are not whales within this space and neither are we institutions. But the institutions and whales think they are playing a game at their level. We are just spectators. Whatever we do is not going to make a dent in whatever they are trying to do. That's what we want to cover in this video, guys. If you want to know more about that and a lot more, please keep watching. But before I proceed, please know that I am not a financial advisor. If you do require financial advice, please approach someone who is actually trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes. That said, let's come back to the fight between Bitcoin OGs or whales versus institutions. What does the data show? The long-term holders are selling. On-chain data from sources like CryptoQuant shows long-term holders, those who have held coins for at least 6 months, they are reducing their holdings. For example, 405,000 BTC was sold in October 2025 by the long-term holder. The long-term holder supply metric has dipped, which in the past cycles can signal a top or profit-taking phase. Some commentary frames this as OGs handing the baton to institutions. Long-term holders are cashing out while institutions step in, which then begs the question. For retail investors and most influencers, all they keep bleating about, buy Bitcoin, buy Bitcoin. Why? Because they want you to provide liquidity to the whales. Some of these influencers, I don't think they've got an idea of what they're talking about because they can't sell, but the OGs are selling. And we are all being left holding the bag. And Bitcoin is mopping all the value. It is a vehicle to mop value. In its and of itself, it doesn't have any value. It's the value it's mopping around. That's what gives it any value. That's my take. You might laugh at me, but that's what I think. Institutional flows, ETFs and ETF-style demand. Well, institutions remain active. Reports estimate large institutional flows into BTC and remaining inflows in 2025 into 2026. Of course, of late we have seen some outflows on a regular basis or on a constant basis. However, recent outflows from major ETF products have also been noted. For example, BlackRock's Bitcoin Trust reportedly had record outflows of over $500 million this month, November, time of recording. Whale and large holder behavior. What is it looking like? Whale concentration remains high. Large addresses of 10 BTC and above hold an increasing share of supply. We're talking of 65% per one article. Whale accumulation is still happening in some large wallets, even as long-term holders sell off. So flow dynamics are complex. Let's not forget retail weaknesses as well. Public commentary and data point to a lack of broader retail enthusiasm. For example, fewer new buying disclosures, weaker demand signals from smaller holders. For example, long-term holders selling could reflect lack of retail uplift to hold price supported. The divergence between price performance and ETF institutional flows also suggests less classic retail form of this cycle compared to the last. What could be a play now? The battle narrative. Well, OGs or whales are profit taking. It appears many long-term holders are taking profits at higher price zones. You're talking of 100K and above to the current all-time high of around 126,000. They may also be anticipating diminishing returns or higher risk from here. Institutions arriving or already here. Institutions are positioning for medium to long term, potentially accumulating, but they may have longer horizons, different risk tolerance. With fewer new retail entrants showing up, the market may lack the dumb money, impulsive flows that have powered earlier blow phases. That may mean the dynamic is more whales versus institutions than retail surge. Let's not forget liquidity transfer. One way to view it, Bitcoin whales sell into the hands of institutions via custodians, ETFs, larger scale buys. That could be a structural shift rather than mere liquidation. For example, long-term holders dumping on Wall Street was quoted. Market maturation. If so, the market is maturing. Less purely speculative retail hype, more large-scale strategic holding. That changes price dynamics, less vertical explosions, more plateau and institutional accumulation. Next, a risk of timing mismatch. If Bitcoin whales or Bitcoin OGs exit too early and institutions buy too late, or institutions begin trimming, the supply side may press price down. Market could enter consolidation or decline rather than new highs. So, if Bitcoin OGs are selling, was this a wise move from their part? Well, they may have bought earlier, often at very low cost. Taking profits at high levels protects their gains. Data shows they hold a lot of unrealized profits. Selling some makes sense to diversify or reduce risk. But if they believe the next major leg up will be in altcoins or other assets rather than BTC, it may make strategic sense to cash some out now. If retail demand is weak and institutions may not pick up full slack, selling early may avoid being being caught when price stalls or declines. But here is the argument that it might be unwise for Bitcoin OGs to be selling at this point. If BTC continues another major rally, say 150 to 250k, then selling too early means missing out on upside, and these guys might have bigger bags than we think. Some selling may undermine market confidence, causing price to stagnate. There is risk that institutions might not absorb all the supply being sold by OGs. A mismatch could lead to downward pressure. Overall, given the data, the OGs move seems reasonably prudent, especially under conditions of weaker retail demand and uncertainty about the next leg. It might not reflect they think this is the maximum price ever, but rather now is a good time to lock in some profits. And what does this mean for the wider crypto markets? Well, the price may go into a consolidation phase rather than a sharp new leg up until fresh demand, retail or institutions surfaces. If institutions fully absorb the supply being sold, the market could remain stable and then initiate next upward move. If not, price could drift or fail. The battle between whales and institutions may shape who sets the price. If whales dominate supply, they may cap upside. If institutions dominate demand, they may drive new highs. Retail absence means the classic blow-off phase is driven by retail mania may be less pronounced or delayed. Think of this market as a relay race. The OGs and whales have sprinted their leg and are now passing the baton. They're stepping to the sidelines, hands out saying, your turn, you big institution. Anyway guys, that's my take on what I think this market is saying. What are your thoughts? Let us know in the comment section. Until the next one, FD for Switch5.tv signing out for now. Bye.